We don't give to ministries that take on debt because we don't want to support a bank. We're there to support the ministry. And we don't believe in debt. So it'd be a little inconsistent if we don't borrow money, but we give to something that does.
What do we have here? We have the lender name, Dave Ramsey, as trustee, has a loan of $96,000.
So that means he's loaning $96,609 to the foundation?
That's correct.
Okay.
So Dave does use debt.
Hey guys, I'm here with Dan Kaminsky with Foundation Launch, and we did a video breaking down what a private family foundation is. And we've gotten lots of people that are stoked, interested, lots of questions about how to set up a private family foundation. One of the things that we said in that video, Dan, is that we are going to be looking at other prominent people that have private family foundations. And because a lot of this stuff is open to the public, we are going to start looking about what people are doing, not just what they're saying. And so for the very first person that we're going to be talking about is our good friend, Dave Ramsey. And I'll be the first to say, that's all I know. So I'm going to hand it over to you. Welcome back to the BetterWealth Show, and I'm excited for the series.
Thank you. Yeah, I think one of the misnomers with the private family foundation is when people hear private, they think it's actually truly private. But one of the things with these foundations is that you can actually go out and see the tax returns as far back as they go. And so one of the things that I went and did, because I know you cover Dave Ramsey a good bit on your channel, is to go see, does Dave Ramsey have a foundation? And sure enough, he does. And so in this clip, he talks about his foundation. And so we'll take a look at that, and we'll verify some of the information. I'll kind of show you how I find a foundation. And then we'll look at what are the assets of the foundation, how much is he contributing, how much is he giving to charity. And then I have an ace up my sleeve on this one. So
no. I told Dan, my dream interview is with Dave Ramsey himself. So if you're watching this, Dave, just know I live in Nashville, Tennessee. I would love to sit down with you. I have a ton of respect for what you've built. But I'm also not afraid to tackle any subject and topic. Dan knows that. And so here we go. Look forward to what we have in store.
My daughter Denise runs our family foundation, and that's actually her job. She spends time with the ministries that we're going to give to or consider giving to determine that they're really getting it done, that they're really effective. We pretend like we're investing in a company, and we want to make sure that company is being run well because we're investing God's money.
So the first thing I'll say there is that this is a really unique aspect of the private family foundation, is being able to hire a family member or anybody else that you want, as long as that compensation is reasonable. It's just like an S corporation. Is in context of other foundations of similar size, you can hire somebody and pay them a salary. You can even provide benefits as well.
What are red flags you look for?
I'm sorry?
What are red flags?
Just curious, what are red flags you look for when you do this vetting?
I want to know what percent. I look at their budget for one thing. In our case, we don't give to ministries that take on debt because we don't want to support a bank. We're there to support the ministry, and we don't believe in debt. So it'd be a little inconsistent if we don't borrow money, but we give to something that does. So
Good old Dave Ramsey. You know, he's always saying that he would never take debt. I know Graham Stephan in the Iced Coffee Hour asked him, like, if you got $1 billion, 0%, would you take it? And he said no, which it's honorable that he's that consistent. Yeah. So that's what we'll leave with on his concept of the foundation. So what we'll go do now is just kind of verify some of what he said. And so he said his daughter, Denise. So if we go look at RamseySolutions.com, we do in fact see that Denise is the director of the Ramsey Family Foundation, and she's been on the board since 2013. So we can go and actually look up the Ramsey Family Foundation, and there are a couple different ones around the country, but the way that we can confirm that this is actually Dave Ramsey's foundation is we scroll down and we can look at who is on the board of directors. And so you see David Ramsey III, which we can verify in other sources, but more importantly, we see that Denise is on there, which he referenced personally. And so if we just look back up at the overall aspect of this foundation, it's been in existence since 2011. It's been tax exempt since 2012. And so this is another key point, is that even though the foundation was set up in 2011 and he contributed a little over $500,000, that is still tax deductible for him, even though the tax exemption occurred in the following year, because the exemption is retroactive to the incorporation date. And so what we can see overall here is that the foundation has assets of $1.4 million here. And on an annual basis, you know, he's not super consistent with contributions, but he has been contributing almost every single year since 2011. In 2023, he contributed a little bit over $1 million, and he's been giving away about $500,000 to $600,000 on an annual basis. So there's a net of about $400,000. So what you'll see is the assets have slowly been going down a little bit here, and the reason for that is because Dave isn't really investing in anything other than a bank account, essentially like a high yield savings account.
Not even a mutual fund?
That's correct. And so we can go look at that. But the ace up the sleeve is this little corner in the bottom right. Do you see the total liabilities? That's really interesting. I thought Dave didn't believe in debt. And so we'll take a look at that. But
yeah, that's crazy.
There was a high of $417,000 in 2021. So the cool part about what I said is being able to go look at these foundations and see what are they actually up to. Is we can drill down a little bit further. So this is for tax year 2023. He had revenue of a little over $1 million, almost $1.1 million. He gave out $250,000, and the net assets are about 1.4. So the interest accrual was $38,000 on the total assets. There was no other dividends, no other sales of assets or anything else. And you can see there's still a little bit of the total liabilities. And so we can actually come in here to this tax year and take a look. We can also verify that this address matches the Dave Ramsey Solutions in Tennessee. He contributed $1 million. There was $38,000 of interest accrued.
So this most likely it's in a high yield savings account.
Correct. And we can see the balance sheet.
Wow.
There were other employee salaries and wages of $166,000. So what's kind of weird about this on the tax return is it doesn't actually show a salary to Denise where it should. It shows up here, which again, without knowing the actual details of it, I don't know how they're doing that, but typically that would show up here. It would also show up lower down on the board of directors. And they paid taxes of $30,000. Now, this one is based on the excise tax of the net investment income. But I think they're doing some weird accounting is the best way I can describe it, because it doesn't necessarily match what the excise tax would be, because that would be 1.39% of the gain.
38.
Correct.
Right. So yeah, why? Okay, so you don't fully understand where that number's coming from?
No, and that's where this is kind of fun for me, because I can go look at these and I start having more questions than I have answers in a lot of respects of what exactly are they doing here? And it might make a little bit more sense as we get further down to the return, but there is some goofy accounting going on with his. And
would you, if Dave Ramsey's team reached out to you, would you take him on as a client?
I would. I mean, and I would charge him more. I mean, he's getting what he's paying for at $920. I mean, it is what it is, but that's one of the things too, is these audit rates are pretty low, but when you do, about 85% of the time, they have an increase in excise tax because the tax returns are done wrong. So if you come down to the balance sheet, you'll see that everything is being put into savings and temporary cash. Now they do have, and even this is kind of funny, they consider land, building, and equipment. They bought a desk and they're depreciating that, which again, should they or should they not? That's kind of personal opinion. In a sense, but yeah, everything's being stuffed into a high yield savings account, essentially, maybe a CD, but really with that being temporary cash, my guess is just a high yield savings account. And so as we scroll down, we can see again, board of directors. And like I said, this is where that compensation would show up if Denise was actually the one being paid. So I'm not exactly sure what they're doing there. We can see that these are the organizations that the foundation is giving to. So, all kinds of, they are very ministry focused, which makes sense in the way that Dave operates. Yeah. And it is kind of cool to see the effect of this. And that what he was talking about is later in that video is one of the things that you should do with a foundation is actually go see the effect of that work. And that's something that you can do is considered a site visit on behalf of the foundation. But overall in 2023, his foundation gave about $250,000.
Yeah.
And we can see who did the return, which maybe I should just reach out to him. But then we can see this is considered the Schedule B. This is where the contribution came from, which is you can see Dave and his wife Sharon. You can see the accounting fees. We can see all the other.
How much they pay for accounting?
$920.
Nice, good for them. keeping it frugal. I like it.
And but then you can see some of the other expenses. So this is, again, the people harp on the 5% expenditure rule, meaning that you have to spend 5% of the net assets of the foundation on an annual basis. the main part of that typically is grants.
Yeah.
But the other part of the spend is other things like this. So they've spent almost $700 on meals, $180 on office supplies, $160 in office expenses, which I probably would have just combined those. Promo expense. So this would be like a marketing expense, almost $3,000, and then shipping expense. Again, not exactly sure what they're doing there, but.
So this is where, like, if they were going to do like a private family foundation, like trip or like getting together or like planning day or like an annual retreat, would this show up here?
That's correct. So that would show up in a combination of whether it was meals, travel expense, lodging, things of that nature. Okay. This is where things are a little goofy. Each year they have this accrual to cash adjustment, which I'm not exactly sure what they're doing there. And this makes sense. The taxes. So that's where that main amount came from, was the payroll taxes.
Got it. Okay. So the taxes is actually less of the excise tax, and it's more of like their portion of, FICA and all when it comes to paying. Okay. Yep.
So that again is like I said, it's kind of, as you follow down, a lot of the answers come into play down at the bottom into the schedules. But back to the juicy part is if we come down to 2017, we click schedules, this little thing pops up, loan from officers schedule. So if we click that, what do we have here? We have the lender name, Dave Ramsey, as trustee, has a loan of $96,000.
So that means he's loaning $96,609 to the foundation?
That's correct.
Okay.
So Dave does use debt. And
yeah, that's interesting. He uses he's the lender, it looks like.
Potentially.
And why would, I'm sure this is a technicality, right? What's the advantage of Dave Ramsey lending to the foundation? Is there some type of tax benefit there?
The answer is I don't really know why he's doing it, because typically loans to and from officers and or trustees is considered a self-dealing transaction.
Yeah. Yeah.
So the part that concerns me for him is that if we go back, there's no other information. It's very bizarre that, if the IRS were to look at this, even if it were a legitimate note, it in the way that it has been described within the return is we don't have any sort of payback schedule. We don't have any sort of terms. We don't have any sort of interest rate, but we do know that it's growing because we see the liability grow. It stayed the same year to year from 17 to 18, but then it grows to 276,000 in 2019, 299,000 in 2020, 417,000 in 2021. Now it is being paid down somehow.
And can you see, is it fair to say that when the loan is going up each year, Dave Ramsey's lending more money to the foundation?
Correct. But that leads to the strange part is the later years don't have that schedule, which it should, especially if the balance is increasing.
Is it possible that this website just got that wrong if there's no actual proof of it?
Well, the reason I know it still exists is because if we go look at the balance sheet, it still exists there. And so this is an example on, what year was this? 2021. On 2021, it grew from 299,000 to 417,000. And yet there's no
and
schedule.
There's not because I obviously you specialize in private family foundations. You obviously do this for people and make sure that their personal address doesn't show up on the documents. And to your knowledge, there's no reason what advantage would it be, or could it just be one of most likely, just giving the benefit of the doubt, knowing how principled Dave Ramsey is probably he's probably not 100% aware that this is happening, and it might just be how something's accounting. It's not like he's taking on a loan from the bank. It's just ironic because, to my knowledge, I don't think Dave Ramsey, with his ethics, would even loan his kids money and have them pay back. I think he would just say hey, I'm going to gift you this money because of what he, and I could be wrong, but I've seen videos of him talking about don't loan people money, but just if you want to give them to be generous, you can be radically generous, but you don't know as it relates to why he has.
Like I said, I have more question marks than I have answers. And I think this could potentially be one of those things where who knows, right? Like, I don't know how this tax preparer is doing this. There doesn't really seem to be a reason in my mind as to why he would do this, considering that in each of those years, there were contributions. There may have been small in comparison, but there were still contributions to the foundation. So I have seen people where they do, again, goofy accounting, where they'll say, oh, it's a future benefit or a future contribution, so they can get the tax deduction in the previous year, but that doesn't work from an accounting standpoint. So I don't really know is the long and short of it. It would be fun to find out. Maybe that'll be something I do is call the tax preparer and ask him what's going on.
And I don't think he'll answer. Can he? If someone calls you and asks, will you like what would you say if someone just reached out and been like, hey, I see that you're a preparer for this tax return. Can you give me more information?
I would say I can't discuss a specific client privileged information, but that again, like that's the cool part. And the problem in a sense with this is this information is out there. And so my, of course, bias is that you should work with somebody that knows what they're doing so that it is done in a proper fashion, so that if you are audited, number one, you don't have an issue there. But number two, a lot of times there's personal information on here. Like you said, whether it's the personal address, whether it's, I've seen people's phone numbers. I've seen the personal addresses of billionaires on their tax returns.
Wow.
And I think it's one of those things where, because the foundation is a separate entity that they're not in every single day and it's not top of mind, they don't really think twice about it in the grand scheme of things. So they don't necessarily know that this information is out there. And that's the fun part here is like, we could actually drill down if we really wanted to see, what organizations is he giving to? How much is he giving? And it's actually less fun than most because there's not a whole lot going on from the investment standpoint. And I think that's something we'll do in future videos is look at foundations and how they're invested, what they're invested in. That gets into some of the things that we've talked about, like with Mark Zuckerberg and the huge capital gains that they have and things like that. But it's just, again, one of those things where we can go look and see what people are up to.
Yeah, no, I personally would love to learn more about what Elon is doing with his foundation. And if you're watching this and want us to look into somebody who has a private family foundation, like Patrick Mahomes, curious what Aaron Rodgers is doing with his private family foundation. I'm assuming he has a private family foundation. And just like, I find it super interesting. I will say this, Dan, if someone had a donor advised fund, would it be easy to see where they're giving, or is it more private?
The donor advised fund is definitely more private because you aren't able to see the contributions and you also aren't able to see where they're giving to. So
is there a world where people like private family foundations, is that like a disadvantage in a way of like, they don't seem very private if we can look up data? I know that there's more benefits that you get by having a private family foundation. Like there's more benefits you get than a donor advised fund, but does it concern you, or is it a turnoff on how it's more public?
That's a good question. So it really is a matter of personal preference. And there's ways to avoid some of the downsides, even if you don't want to be known. But like by and large, the people that are setting these up, their name is attached to it to begin with because they want the status that comes with the fact that you have a foundation. So like that's number one. Number two, they also potentially want people to see where they're giving instead of being secretive about that. Because as you know, especially in the political landscape right now, the more secrets that you have, the more distrustful you are. So in that regard, being an open book and saying, this is how we're giving, this is where we're giving to, these are the initiatives that we care about, and actually backing that up in a public way, I think is powerful. However, there are also the people that want to be as private as possible. And that's where, in a lot of cases, they will go through the work to set up a public charity because it operates very similarly to the donor advised fund, where if you go look at the contribution, like on Dave Ramsey's, it says Dave and Sharon. On a public charity, it'll say restricted. And so you don't get to see who contributes to that, much like a donor advised fund. But when it comes to the foundation and all the other benefits that come from it, what you could do potentially is either I've seen people have a trust that funds the foundation, and the trust just has like a PO box or something like that. So you don't necessarily see, who's on it. They might hire like a disinterested party as to be part of like either the trustees or the board of directors. So their name's not even fully attached to it. It might be just some random name. Like actually the Andrew Carnegie, his is the Carnegie Corporation. So it's like something you would think it's just like a for-profit business, but it's his foundation. And then on the other side is from the giving standpoint, if you really wanted to hide that as well, technically you could give to a donor advised fund and then from there give your gifts from there. Now you're adding extra steps, you're adding complexity, and the potential benefit for the type of person that doesn't want to be that involved may not even make sense at that point.
Yeah.
But there are ways to avoid a lot of the public aspect of a private foundation.
But to the point is, like, if you do a donor advised fund, going back to even Dave Ramsey's example, he wouldn't be able to hire one of his daughters to run it, and they're able to do more vetting. Like, they have certain benefits. I also did not see that, like, he gave to a church on the private family foundation. Maybe we missed that, but I think it's fair to say that Dave Ramsey is incredibly generous, and he's probably giving more outside of the private family foundation. That's just an assumption I'm making. Just maybe not. We could go relook at where he gives, but I think it's like one of those. Just because you have a private family foundation doesn't mean that all your giving stems from it.
Exactly.
So it probably for most people would be the most convenient is to, like, write the check to the private family foundation, get the deduction, and then choose where your money's going. And then the last thing is, and I'm just making, again, this assumption in good faith that I don't think Dave Ramsey's probably in it that deep, because even him and the advice that he gives on his show all the time, like, you would think if he's telling people to put money in mutual funds and all nearing retirement, like, he would be totally comfortable putting a good chunk of that money in the foundation into those same mutual funds that are earning 10, 12% on an annual basis. Like that. That's another example of, like, that would create more interest and be able to give more. But yeah, so that would be one thing. And then obviously, if someone from his team is looking at this, it's probably just a bad look in general to have any type of loan, even though most likely it's some accounting thing that you'll be the first to say you don't fully get. I don't fully get, but it would be something for them to look into, because when Graham Stephan asked him, like, would you take $1 billion at 0%? And he said no. He's not dumb. Like, he understands that he could put that in a high yield savings account and it would be safe, and he would make a ton of money, but it goes off of principle. The same reason why he wouldn't accept a Bitcoin is off of principle. I actually admire that greatly from you being so principle centered, but at the same time, like, it's not a great look on something that's public that shows that you have a liability. So that'd be an interesting point. I appreciate the work that you did, deep dive on this, and I look forward to making this series and just seeing what people are doing. I think the other thing that I'm excited about is that we get to look at really successful, wealthy people and what they're investing in and how they're growing their money in a private family foundation, because they're looking at giving just like they look at business. They want to grow their resources. And it's just going to be interesting to see, like, where are these people putting their money and how can we potentially learn from them, whether it's in our own private family foundations or in our own personal wealth. And I'm pretty excited about that, because sometimes do what they do instead of do what they say.
Yeah, and that's the coolest part, is because we can go see that. Like in this example with Dave, like, it would be a wise steward to actually invest those dollars so that he could grow that. And to your point of how much is he giving outside of this or whatnot, like that becomes a personal philosophy standpoint of, do I continue to give a percentage to the church or something like that? And then anything and above that goes to the foundation. My whole idea would be to, let's grow that, right? So then you're growing your impact and then give from that. And at some point, people tend to shift that percentage, and when the foundation is producing enough investment income, then they start giving all of their giving to the foundation, so that machine continues to grow in the tax-free environment, and their gifts actually grow on an annual basis without any external money. And so that's another good example of, like, if you have volatile income year over year, having the foundation can actually even out your giving, because you're giving from the investment income. But then to your point of these other foundations, that was one of the most fascinating things to me, is these big ones, the multi-billion-dollar foundations, they have some of the smartest money managers out there, and we can go see exactly what they're doing, what they're trading. Unfortunately, it's a year removed, sometimes more than a year removed, because how far out the tax return can be filed. But we can at least still see. I started seeing things that I've never even knew about, and that'll be something that we can unpack.
This is going to be so much fun as a series. If you're interested in learning more, please comment below. If you want to work with Dan directly, you're in business to help. And so if you have a private family foundation, you're like, hey, wait a second, I might want to work with someone that can maybe make it a little bit more private, make sure that I've got everything buttoned up great. And if you're someone that's like, hey, I like the idea of being more generous, maybe having more control, maybe being able to look at my giving and generosity like more like a business than a charity, you can talk to Dan directly. We'll make sure your link's down below. Dan, thank you for this, and look forward to doing the series with you.
You're welcome. It was a pleasure.